A lot of you guys have seen this risk to reward chart multiple times in your trading, but the most common mistake is that they don't apply this chart to their own style of trading. So in this video, we're going to be talking about how you can develop a trading style that fits you as a person.
What I notice with a lot of traders, whether they trade high R or they trade low R, they will trade that style in order to mimic someone that they might watch online rather than a style that actually suits them. I remember when I first started, I did start with higher R, and the whole reason I started with higher R is I didn't have a lot of money and I wanted to flip it into a lot of money. So in my head, I was like, if I'm able to catch these high R trades, I'm not risking a lot, but I'm going to make a lot of money. But what I quickly started to realize is I was losing a lot of trades and I could not stomach those losses. I would take a loss and I would crash out. I would just end up blowing my account. I would end up keep on trading because I could not stomach the fact that I was going to lose a lot of the trades that I was taking. And I slowly started to realize it is not a system that fit me and the way I am as a person. And that is when I slowly started moving towards a lower R system, as I was able to be a lot more precise and I was able to use patience and wait for a setup that I was confident in. And I knew that majority of the time that trade would end up panning out.
Me personally, when I first started trading, I had more of a lower RR system. So I decided a nice 1-to-1, sometimes a 1-to-2 RR, targeting a 60-70% win rate was the best way to go for me. Now, the reason behind that is because I could not stomach losses. I thought that if I would just win more, I would probably become profitable a lot faster. Now, I was getting payouts when I followed the system, but as I developed as a trader, I realized that I was missing a lot of the bigger moves. Even though my analysis pre-market, when I was doing my analysis, I saw that all of my drawn liquidities, all of my targets, they were hitting. Now, when I developed, and as the years went by, as the months went by, I realized that me transitioning to more of a non-fixed RR style was the best way to go for me. I was able to catch bigger moves when they were presented, and I was also able to catch lower RR moves as well, like the 1-to-1 and the 1-to-2 RRs that I was talking about when I first started to trade. Now, what you guys have to realize and what you guys have to focus on is what type of trader are you? Are you more of a fixed RR trader or are you more of a discretionary trader?
So a lot of people will collect data and they'll start to see that they do have an edge. But when they go to apply it to live markets, they'll start to see psychologically that edge does not fit them. Maybe you collected data on a low RR system. But when you go to apply this low RR system, you take your trade, you wait for your trade, but you don't make as much as you're confident in because maybe you didn't risk an amount that you were confident in. What ends up happening? You get emotional, you start taking more trades, you end up losing the account. Same can go contrary to a high RR system. You collect data, you start to see, I'm able to have a nice return, R return, but when I'm trading this higher system, I go to apply it live market, I'm not able to walk away after my losses. I'm not able to take a couple losses in a row, understand that it still follows my system, and I end up getting emotional and these emotions take over and I end up losing my account.
Now the thing is, both of these systems work. Either if you trade low RR or high RR, it doesn't really matter. You can still be consistently profitable with either. Now the real problem is you are not finding consistency in either of these systems because they are not tailored to you. Now, an analogy that I want to give to you guys is basketball. Basketball is a perfect example. If you look at a three-pointer shot versus a layup, what is more consistent? A layup, because you're closer to the basket, right? A three-pointer, you're farther away from the basket, so obviously the probabilities decrease. It's the same thing with risk to reward. A 1-to-1, 1-to-2, you're closer to your targets, so you're going to be able to consistently execute that versus you targeting more of a 1-to-4 or a 1-to-5, right? But what gives you more reward? Obviously, the 1-to-4s and the 1-to-5s, you're able to make a lot more money. The three-pointers, you're able to score more than the other team compared to a layup. Now, you have to specifically see what is catered to you. Do you want to go for more layups or do you want to go for more three-pointers?
So then, how do we fix this issue? Journaling. You want to make data-driven decisions, not emotional decisions. Let's say you have a profitable edge backtesting. You're netting a consistent R. You should be profitable. But you now go to apply this to live markets and you're losing money. This is where people will give up, they'll get frustrated, they'll get fed up, they'll start thinking emotionally. Rather than, how can we make the comparison from live markets to back testing? What is the one thing that back testing does not have? Emotions. So what do we really need to focus on tracking in the live markets? Emotions. When you are taking a trade, how are you feeling on that trade? When you are taking a win, how are you feeling on that win? Are you feeling underwhelmed? Are you feeling nervous? You have to track all of these emotions. When you track all of these things on your trades, you'll start to see where are you leaking. When you compare those live trades back to those back-tested trades, which trades are not following your system because you're now acting based off your emotions rather than your system. The goal is to look at the bigger picture, compare the two, and see where am I going wrong and how can you make these optimizations now to fix that issue.
You may be tracking statistical trades in your journal. You also may be tracking emotions in your journal as well. But what most of you skip over is not tracking the days where you blow your account. Take a look at your bank account. That is quite literally probably the best way to see, is what you're trading right now working or not. I know me personally, when I saw $150, $150, $150 keep leaving my account day after day after day, I realized that there was something wrong with me and the way that I was trading. Now you need to do the same thing. And yes, that may be hard to do. That's not comfortable to do. But again, if you want to find an actual system that is comfortable for you, again, whether it be low RR or high RR, you need to track this metric. How many accounts are you blowing in a day? How many accounts are you blowing in a week, in a month? If you do not understand how much money you are actually spending on prop firm accounts, you will not be able to actually realize, what system is good for you. Now, once you've discovered this problem, do not try to run away from the problem. Do not make things worse. I see a lot of you guys try to back test your way out of these type of problems that I've mentioned. That's not going to work. You've already realized that you have a profitable strategy. You've collected data through back testing, but the real main issue is that you are not applying what you're most comfortable with in the live markets. You've probably taken good trades trading a low RR system. You've probably taken good trades trading a high RR system. But what can you consistently execute? High RR or low RR?
Once you have found consistency in a system that suits you, you're able to mitigate that emotional side of trading. But this is where refinement comes in. Now you're able to stick to that system for months on end and collect more and more data, and you can make slow refinements to the way you trade. Me personally, the way I refine my trading is I was able to take that base low RR trading and slowly optimize my entries, slowly optimize my trades to get a slight higher RR, whether it's 0.3, 0.4 R extra on my trades, and therefore also lowering my frequency to capitalize and bid heavier on those trades that I'm confident in. But the only way to make those optimizations is to follow the base system that you're able to follow emotionally tacked for a prolonged period of time. If you can't even follow that system that you're trying to trade, you can't make refinements because you cannot stick to that one thing.
Talking about my own trading style as well, as I've been trading for the last almost 2.5 years, I can also say that I started off with the low RR system. Now, the thing is, when I had a low RR system, when I started with a low RR system, the only thing that I was focusing on was how can I consistently execute this system and be profitable with it first before I went on to add new things that I was noticing in the market play out day after day after day, month after month after month. Now, this is the difference between me and you. You guys may see all these different things and you guys don't treat it as noise, which is what you guys should treat it as. Treat it as noise, stick to what is working first, right? Or what you believe that can work. Again, it can be a low RR system or a high RR system. And then once you're consistently profitable with it, look to refine your strategy. Look to add more things that could positively impact your trading. That's exactly what I did. So like I said in the beginning of the video, and like I said in the beginning of this little tangent right here as well, I started off with a low RR system. And now, over the years, I've focused more on trading based on what is price showing. I trade based off of drawn liquidities, and I've shifted more into trading based off of trade ideas and managing my risk as efficiently as possible. Now, what I want to end this video off on is do not try to copy other traders. Build your own framework and build on top of that. Have a framework first and build on top of that.